if I was down to my last dollar, I still wouldn't buy life insurance. So this is my just a presentation on positioning life insurance to business owners. So before we start, I've got a bit of a personal admission. And I don't know that you know this or if you know me, but I happen to love life insurance. And it's not so much the product per se that I love. It's not the YRT, whole life, term, DSII, RRR, all that fun stuff, right? It's the intentional outcomes that life insurance produces. That's what I happen to love. I love the fact that we meet with really successful people and we're able to take them to places to show them their blind spots and come out with these fantastic outcomes. So we'll talk a bit about that as we go through this presentation. And it was really this that kind of kicked off my thoughts before CLU, and I was able to formalize some of those. So hopefully you like this. The mission of this presentation is to share some ideas on working successfully within the corporate marketplace. Now, some of you may be in that space. Some of you may have written a couple sales there. The idea, what I try and do and the programming that I help build is to try and help you create more consistency in that space. So hopefully we share a couple of things that you can tack into your practice. Obviously, we're not going to be able to cover everything just because it's impossible in an hour for one presentation to be it. And the other thing I want to point out is there is no one pager that makes people buy corporate-owned life insurance. There's no one book you can read that will sum all this stuff up. I have been asked this at several seminars. And a couple months ago, somebody asked me if I could create a one pager that would make people buy corporate-owned life insurance. And pretty much if I could do that, folks, I wouldn't have time to talk to you. So that does not exist. But hopefully a bunch of the ideas that we share will resonate with you. Hopefully they'll become congruent with you and you'll be able to get in front of clients on a more frequent basis. So the agenda that we're going to follow is really kind of my recipe for building a successful practice in the business owner market space. We'll touch on a thing on an old idea called the quarter-inch drill bit. We'll talk about terminal taxes in succession, an idea called bricks and mortar that I got, and another idea of dairy farmers and business owners and what they have in common. So the cool thing about this is none of this is an original idea. All this stuff I can source pretty much everywhere that I've stolen ideas from, and I probably will as we go through. I'll tell you like where the idea originates from. But I think some of the best ideas are the ones that we get from other successful people, and we practice it enough, we put it into our practice, and it becomes ours, right? It becomes a piece of us. It becomes available to us when we need it, when we're in front of clients. So the first thing that I start with here is identify your ideal audience. And so listen, if you've been running a practice for years and years and years, and you've built, a practice just of kind of hodgepodgey everything, right? So you're running pretty much a generalist practice. Nothing wrong with that. But if the idea is that you want to transition and be more consistent in the business owner marketplace, what I would say is go through your book of business and try and identify who that target audience is. Like, do you have a couple businesses that you see repeatedly come up in your client roster? Or is there a particular business that you think that you can raise up your level of intelligence, your level of leadership and influence with? The idea here is, if you read pretty much any marketing book, and I've listed 4 just in front of me just to kind of prompt my mind. I'm reading one right now called The One-Page Marketing Plan. Really good book. But guess what it starts with? Know who your target audience is. So if you're going to market to people, you've got to know who you're marketing to. It makes it a whole lot easier. Another couple books that I've just read recently, The Win Without Pitching Manifesto. It's a marketing book, pure through and through. If you haven't read it, solid book from a guy out in BC. But once again, start with your target market, your ideal audience. And there's a number of other books. If you're interested, I'm happy to send out a list of books that you can read on this. But they all say start with that ideal audience, that ideal client avatar, that target market. And the reason why is because it's the easiest person for you to approach. And if you can really do this well, you can know the conversation that's going on in their mind, and it's easier for you to break into that conversation, right? When you know how people are thinking and the things that are going on inside their marketplace. So that's the idea behind target marketing. And who you should target market, like, I'm not here to tell you it should be, doctors or dentists or anything like that. And you might say, hey, listen, I work in the business owner market space and I'm very successful and I don't need to target market because I'm really good at just attracting business. Then don't target market. What I'm saying is, if you're having an issue creating consistency in your business, where you've dabbled up to now, you've done a couple nice sales, you know you could be doing this on a more regular basis, it's probably because they're trying to sell everybody from plumbers to carpenters to doctors, dentists, and big business owners, right? So it just helps you to create consistency, is really what target marketing is all about. Another book that I love is Give by Nicholas Kuzmich, a Toronto boy. This is a book on marketing on Facebook. He is the king on that. But what I love is, I love this pyramid that he created of the 4 positions that anybody can hold in any given marketplace. And the first one is generalist. And that's how pretty much most of us come into the business, is we're taught to kind of be all things to all people. But I'll tell you, it takes an incredible amount of energy and knowledge, and you have to be a really outgoing person to be a super successful generalist. So quite honestly, specializing makes it a whole lot easier. I will tell you that I specialized about roughly 15 years ago in working with high-end advisors that only deal really in the business owner and estate market space. And that's pretty much where I spend all of my time. It's not that I can't do like the other types of things, but that's just not where I tend to specialize in. And so if you like the idea of dealing with business owners and you're not creating that consistency, specializing could be that big thing for you, right? It could be that next level thing. And the next level up from that is authority. So that's when you're going into, LinkedIn groups and Facebook groups, and you're putting out really thoughtful content, and people are consuming you, and they're coming to you and asking you questions, and they're, you've become an authority within the space, within the sphere, right? Within that community that you're trying to break into. That's what you want to get to, because ultimately that's what gets people to start hitting up your LinkedIn. That's what gets people to start checking you out. And that's what drives them to their website to see what your process is and all of that. And that's a really great place to be. And if that's the only place you ever rise to, that's an amazing spot to be at. And there's only a really small amount of people within the Canadian space that have really reached that last status, which is that celebrity status, right? And that's where people are asking you to come speak places. They're asking you to come get, to write articles and stuff like that, because they not only recognize that you're a specialist and authority, but they also realize that, people want to listen to you. People want to come and search you out. So from generalist to specialist, it just really forces you to level up your knowledge. By doing this, though, you gain a lot more confidence. Your ability to approach business owners gets much more comfortable, because you know exactly who you're approaching. You know what's going on in their industries. You know what it's like in the various phases of their business. It really does provide you with a lot of power. And power is an interesting thing in a client relationship, because if the client feels like they have more options because they don't really think you specialize or can really help them, then they're going to go and check out other things. But specialization really helps shift the balance of that power towards you, right? And it's you and your process. And we'll talk about process in one quick second. But that's what's really going to make you referable within that community, right? Within that target audience community out there. And referrals, as we know, is the number one way to do business. So we can go out and do all this marketing and everything, but if we can get a referral to somebody who knows who it is you help, knows your process, and you have a track record of doing well, of delivering the goods with people, then you know what, that becomes a very easy thing for them to refer, and it becomes an easier way of doing business. Everybody's got a sales funnel. So with everything starts with that target market, everything starts with knowing who you serve and how you can serve them. Then we just need to go out and find our community. So whether that's going out and doing your BNI groups, it's your prospecting, it's your social work, you've got to go out there and find that community. And ultimately, we want to try and raise our awareness, pique their interest, get them to make a decision. And by the way, when we're online, we're not selling anything, we're giving away value, right? And anybody that's ever read anything by Vaynerchuk knows he gave the formula of give, ask, right? So 3 gives to every 1 ask. The big thing there is the more you give and the more thoughtful you are online, the more people are going to decide to take action and reach out to you, because if your collateral is good, if they know your process and they know that you're authentic, then they're going to want to become clients. So that happens when they make a sale, and they really become valued clients when they start to know exactly who you serve and they start making referrals to that. We run a course, and in that course, I remember once somebody said, I can sell accountants, but I can't get referrals from accountants for whatever reason. And I said, well, it's probably because they don't know who your target audience is. And when we went through everything, they didn't have a process. They didn't have a follow-up process. So, for the accountant, that becomes a hard thing to refer to. If they can't easily identify who you do your best work with and that you're process driven, that becomes a hard referral for them. I'm not saying that you haven't won referrals here and there. I'm just saying if they're not coming as consistent, let's drill back on that process and take a look, because it is very process driven what we do. And so you might have a process that looks something like this one over on the side here. And just understand that what's unique, your UPV is your unique value proposition. It's you, your knowledge, experience, education, and your process. That's what's unique. Everything else they could get from somebody else. That Equitable Life, Equimax, 20 Pay, Wealth Builder, blah, 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 blah. All that stuff can be sold by anybody with a license. What they're buying is you, your knowledge, experience, education, and ultimately your process, right? What's the process that you take people through? And how do they know that you're going to track and measure them to success? Everything else is really a commodity, folks. All the product that you sell is all commodity based. If you have a license, you can sell that stuff. So really, let's drill down and create something that's amazing. And what's amazing is you, your personality, and who it is that you want to serve. And so I call this little section here fact versus crap, and that is what's real and what's not. And what the industry gets bogged down with is the idea of products and concepts, right? And by no small part, guys like me have come out and we've taught products and concepts. And it's interesting, in a recent survey done by the Insurance Journal, advisors said the number one thing they wanted from their MGAs was more training on concepts. Concepts are techniques and tactics, folks. The real, the real business happens by knowing your market and thoughtfully and thoroughly fact finding. That is the key, right? And we don't really spend a lot of time on the questions we ask, right? And that's really where a lot of the business gets done with the business owner market space. Really comes down to how well we fact find. And I will tell you that, I mean, I work on lots of cases like all the time. And we can really, as an advanced case person, when we get the initial facts coming in about the client and there's a lot of holes, then we know that something's probably been pitched to the client, but you may not really understand what the client's about, what they value, how they've built their wealth, and what's important to them. And that's really why fact finding is such a key. In fact, we have a course that teaches on that, right? How to properly fact find business owners. It is something that you need to do because it is all about the questions we have. We need to disturb them to create the emotion, to expose the blind spots. The more we know about their businesses, the more value we can add to them. It's all about those open-ended questions versus those closed leading questions. And whether you follow me or not on LinkedIn, that's totally fine. But if you go back, and I can try and refresh it or bump it up, a couple months ago when I did this presentation, I posted a whole bunch of open-ended questions and things we look for on corporate cases. And so what I would recommend is, if you get a chance, just go on and steal that. And hopefully you can add that along with what it is that you do. But it's not just about the questions we ask. It's really about the active listening, right? And so we need to be hearing what they're saying, not to ask the next question, but to let them kind of really tell us what they value, how they build things, what's of concern to them. And it's not enough just to have your questions ready, but we've got to practice this. Practice is the ultimate gift on getting it right. We want to practice till we can't, till we can no longer get it wrong. I would say that I don't go in with a set fact finder anymore. Pretty much I start to ask questions, recognize what phase of business they're in, and then we shift to there to find out what's going on. But good fact finding allows us to identify what phase of business they're in. So if they're in the startup phase, I'm not going to talk to them about that large retirement type planning whole life. I'm not going to talk to them about immediate finances and stuff like that, because that's probably not where their cash flow is, right? So we've got to understand where they are, and then we've got to demonstrate to them that we have clients just like them in the upcoming phases that we can be of great value as they're progressing their business. If you've never read Broad Concept, obviously you can tell I read a lot of books, but I haven't read this one in like almost 20 years. But there's a book called The Broad Concept Approach by Harold Zlotnick. And I think you can get it by going to ZLC directly and ordering it in. It's a really cool way of presenting, and I'm not going to ruin it for you, but you can go online and learn more about it. But it's a great way of being able to present with folks. And it's a great way of presenting to their significant others, to let them see that, you know what, the state of all right that they think their business and their family's in may not be exactly what it is. So the top ideas and concepts that you need to know going out there, obviously insurance for loans for that startup phase. And honestly, in that beginning phase, when they've got personal guarantees, folks, we've all been to conferences and they tell us, I remember the question they gave us early was, what keeps you up at night? Now, I could never ask this question really well because like I didn't bring it out at the right times. And I will tell you that when it comes to business owners who are starting out and they've got personal guarantees on the loans that they've taken out, that's what keeps them up at night early. And later on, it could be that their family's not going to be okay. It could be that, could be that they have all these employees counting on them. It's different for everybody, but in the beginning stages, that's going to keep them up at night. There's key person shareholder agreements, which everybody knows. I love shareholder agreements. I think it's one of the best ways of starting a really deep relationship and getting into all that other planning. Corporate estate transfer, corporate insured retirement, estate equalization, immediate finance. All this stuff is great, folks, but it's not about knowing these concepts or ideas at a topical surface. You need to have an understanding of these ideas at a really deep level. And more than that, even more than the ideas and the concepts, you've got to have an understanding. If you want to be in this space and be successful, you've got to understand structures and taxation. And you've got to have, there's a thing, I was using it, I didn't realize it was a thing, but I called it looking through the structures. And the great thing was when I went to CLU, I heard somebody say, you've got to look through the structures. And I thought, wow, that's awesome. That's exactly what I was just saying to someone. And so we're going to cover that a little bit about looking through the structures, because that's where all this stuff really starts to make sense. And what you're going to find is there's a lot of business owners that are doing well, they're wealthy, and they've got structures, but they really don't know what those structures do for them, right? So they've paid a lot of money, they've done a lot of implementation, but they're not sure what those structures are. And I'll always say to you, remember that clients buy emotionally and they validate logically, right? But they buy for their reasons and not yours, right? And if we understand what they value, where they put their money and how they built their wealth, and we can present something that eliminates pain or delivers pleasure. But I'll tell you that most of us know that people will do more to eliminate pain right away than what they ever will for long-term pleasure. So if we can get rid of that pain, and we don't break their value systems, I'm telling you that we end up with a recipe to do business. A gentleman that I know from online, and some of you may know me more from online than in person because I'm here in Ontario and you might be somewhere else in the country, by the name of Milan Topolovic. He gave a great line at CLU, which is, would you allow me to see the world through your eyes? And this fits really nicely with the idea of looking through the structures, right? It's basically saying, tell me what's important to you. Let me see what it is you built and how you built it. And I'll tell you that the longer I've been in the business, and this is my 25th year, the more I get to understand how somebody's built their wealth and what they value, the more I can usually figure out how they'll own insurance. And so the more that we can get them to show us what it is they built, what it is they value, we're not butting heads or conflicting with them, right? So if we want to talk to them about, and I'll give you an example to this. About 3 months ago, I get a call from an advisor, all excited, wealthy client, lots of real estate. I mean, probably the largest real estate portfolio I've seen anybody build to date in Canada. And it's both here north of the border and south of the border. And they're like, this person is absolutely primed for an IRP. And they've told me this is the amount of money that they want on an annual basis. And I said, well, okay, that's a really weird comment to me. They said, why? And I said, what's the net revenue that their properties are producing? And they told me, and it was 3 times what the amount was in retirement that these people wanted, right? And so what we ended up talking about was, once we started talking with the client and we could see the world through their eyes, was, what do you plan to do with this? Like, what's your strategy with this? Are you buying hold? Are you buying flip? Are you buying rip down, fix, flip? Like, what's your strategy when it comes to the real estate? And they ended up explaining it to us. And ultimately, guess what? They want to pass the cash cows down to the kids. So we're off on a tangent because somebody walked in with a strategy or a tactic talking about retirement income, but they had already more than met that goal on a passive basis, right? So what we talked about was, how would you like things to happen? In a perfect world, how would that happen? And what are you doing with your money now? And how do you deploy your assets on an annual basis? And we get into this whole discussion, and they let us see the world through their eyes. And we ended up finding a strategy that makes sense for them, and it allows them to pass the properties to the next generation. So allow me to see the world through your eyes is a great question. And it kind of leads us to an old example. I say old because it's definitely older than the 25 years that I've been in the business. And some of you may have heard this one before, and some of you may not have. I actually thought pretty much everybody had. And then when I did this presentation live to a group, I think only like 5% of the room actually had ever heard this example. So if you have, stick with me. I've got a new twist on it. If you haven't, well, enjoy. This will be a new one for you. So I don't know if everybody on here remembers, and this works a lot better live. So some of this was set up for live presentation, so I apologize. But there's an old example of the number one drill bit sold in Canada or North America every year is the 1/4-inch drill bit. And the question is, how many people actually want a 1/4-inch drill bit? And the answer is none. Nobody wanted a 1/4-inch drill bit. What they wanted at the end of the day was a 1/4-inch hole, right? But we don't get the hole unless we get the drill bit, right? And I would ask, do they really? So if I'm doing let me see the world through your eyes, right? Let me understand why we need a 1/4-inch hole. Do they really want a 1/4-inch hole? And I'm going to say, in my world, probably not, right? Ultimately, what I would want maybe that 1/4-inch hole for is to hang a picture, right? So if my wife and I went out and we bought a picture, my wife would obviously want it hung, right? So I might need a 1/4-inch hole in order to, rig it up to the wall. But ultimately, do I really want the 1/4-inch hole for the picture? Maybe not. Maybe I'm really into that picture. Or maybe it's just that I want to please my spouse, right? Maybe that's the end result that I'm looking for, is that we bought this picture, I've come home, I've proactively put it up, my wife's happy, that's a good day, right? But I say, is that maybe not the end there? If we keep looking through this, maybe my motivation for doing this was, I knew that if I drilled the hole, hung the picture, wife was happy, I could go do what I want to do, which might be golfing, getting back to the game, hanging out with my kids, or just experience some alone time and reading, right? So ultimately, the interesting thing about the 1/4-inch drill bit is nobody wants the 1/4-inch drill bit. What they want is the hole, but they don't even want the hole. What they want at the end of the day is to get back to what it is they actually want to do. And the same thing is true about life insurance. Nobody actually wants life insurance. What they want is what life insurance produces, right? And so once we have a deep understanding of what it is ultimately they want to achieve, we can see where the insurance fits and where and how they'll buy it. So how is this applicable? It always comes down to solving for X. So anybody who's seen me present, I mentioned this a lot, solving for X. And I don't know what X is. X is different for every individual. But the nice thing is, when we're dealing within our target audience, X is usually going to be fairly similar. So this helps us with our scripting and knowing the market and knowing what's important to them and knowing the different techniques and the strategies that go on with whatever it is, whether it's real estate acquisition, whether it's physicians, whether it's dentists, there's all these things that when we have our market and we know the common X's, we're going to see that come up and up and up and up. And the reason why we want to do this is because that's going to create that repeatable process that we know is a winning process. And then we've got to look through those structures. So many a times we'll get in front of business owners and like I can tell you that about 60% of my time is really either reselling, explaining, or selling the accountant's agenda a lot of times, right? So a lot of times when we're sitting there, I'll say one of my questions is, what has your accountant been tapping you on the shoulder to get done that you haven't bothered to do, right? And so one of them might be like, we know that they're retaining earnings on an annual basis. They've got a good pot of money starting to build. And I'll say, have your accountant ever talked to you about a holding company? Has he ever talked to you about doing an estate freeze and maybe adding a family trust in there, based on what we know about them, right? And a lot of times they'll say, oh yeah, you mentioned that, right? Or, oh yeah, we did an estate freeze. Oh, that's great. That's really great planning. Do you understand why you did that? And they understand bits and pieces. But if we can take that and break that down into really plain language, and they'll pick certain things out, like every one of them remembers that this multiplies the capital gains exemption, but they don't know how everything flows through a lot of times. So if we can look through the structures and we can tell them why what they've proposed really makes sense, or why what they've done really makes sense, then we also get to see the structures as to where they should own insurance. And, recently I sat with a very successful business owner who had probably about 20 businesses. And once we got to the point where we found common ground, I understood how he built his businesses, where he valued his money being, sort of yields he was getting on investing in various businesses that he had. We were able to figure out what sort of insurance he should have. We were able to narrow down a timeline, or sorry, not a timeline, an amount, and we were able to nail down the concept that made sense for him. And the only question left at the end of the day, this guy said, is, which company should I own it in? And so because we had looked through the structures and we understood which structure was not saleable and which would last the test of time, that's what allowed us to be able to confidently say, this is where it makes the most sense, but we should lean back on your trusted advisor, the accountant, to confirm that, right? And the interesting thing is, a couple months ago, I got a call from an accountant. And I knew we were going to get a call from him. I just didn't know when. And I knew we were going to get a call from him. I just didn't know when. More than that, I think we spent the bulk of our time saying, more than that, I think we spent the bulk recommending made really good sense for this business owner from a structural standpoint, that they had just outgrown the initial structure that they had, and they needed to spend some money. But to them, that didn't seem like an investment in tax savings down the road. It just seemed like a big spend to them. So when we looked through that structure and we explained it to them, they agreed that the account, this totally makes sense. I now understand why they're proposing it. And they went and talked to the accountant, and they, at the same time, were considering some life insurance that we proposed. And the interesting thing was, we sold more time on the accounting and less on the insurance. The insurance, we talked about what the insurance would achieve, the outcomes in that. And it was like, yeah, that makes sense. We get a call from the accountant, and the accountant actually took me and the advisor out for lunch, and they paid, because they said, I've been trying to get this guy to do this for about 2.5 years now. And your call, when you guys went there, it made sense. And oh, by the way, I think you should pursue the insurance, but I think it's a little light. I think we should have a little bit more. And we explained it. He upped the sale, which was great. Let's talk a little bit about terminal taxes and succession, right? Because if we're going to deal with business owners, we have to have an understanding of terminal taxes, and we have to have an understanding of succession, right? And so this is where we get into that line. Have you ever heard an entrepreneur, business owner say, even if I was down to my last dollar, I still wouldn't buy life insurance, or life insurance is a scam, or whatever it is? It's because they don't understand. They didn't either understand, or some family member bought some life insurance and they canceled out of it earlier, and they got, they didn't make what they would have made. They didn't have the coverage when they needed it. They lost some values because they bought a high delayed cash value contract, or whatever it was, right? Or they bought a UL with large surrender charges. There's always a story out there. What we've got to do is, when we and this goes back to Stephen Covey, when we seek first to understand and then to be understood, and we position life insurance to solve their problems and take away their pain and increase their liquidity use control of their money, then we're able to move things down the road a little bit better, I think. And so when advisors hear this, right, this is the reaction of all financial advisors, life insurance professionals, right? When we hear that they wouldn't buy life insurance, that it doesn't make sense, right? And so To us, ignoring it, doing nothing is not an option, right? Like we want them to take action because we know the cost of not taking action can ravage an estate, right? Can close down businesses. So doing nothing to us is just absolutely not an option. And there is this thing called the business owner ostrich maneuver. I don't know if anybody's ever seen this one before, but this is where they just go about, they bury their head in the sand and act like, none of this exists. And for us, this is a problem, right? So this is where, if we were live, I would be doing what's called the 1990s old school analog poll, which is doing nothing an option? And you guys would sit there and either go thumbs down or thumbs up. But absolutely, the result is doing nothing is an option, right? So is doing nothing an option for business owners? Absolutely it is, because you know what? They've done nothing a lot of times up till now, and they've been very successful and they built big net worths. But what they're not looking at is the long term. They're not looking through the structure and seeing where things are going to land or seeing what the potential problems are. And then they're not being asked, is that what you would want to have happen? So part of the disconnect is it's offense versus defense, right? And what I mean by that is, and obviously we want them to show us the world through their eyes. And when we see it through their eyes, what we realize is most business owners, almost 99% of them, are going to be focused on offense, meaning that they're focused on building things. They're focused on running their companies. They're focused on throwing touchdowns. And I don't care if you like Tom Brady or not. I still think he's probably the greatest quarterback to have played the game. But Tom Brady knows the first 10 plays that the offense is going to run. It's scripted. It's prepared. It's ready. What he doesn't know is the first 10 plays that the defense is going to run. And so business owners inherently are offensively, and not offensively like they're offensive, but offensively focused, right? They're focused on scoring touchdowns. They're focused on making money and growing their business. And we as advisors are inherently focused on defense, right? Because that's our job, is to try and keep together what they've worked so hard to put together. So the defense and the tax planning kind of goes like this, right? If they do nothing, which they could do, bury their head in the sand, they would be subject to double taxation. And the tax rate they face, depending on what province you're in, could be upwards to 75%. Now, here's the good news. No, anybody that's got a decent accountant will not allow this to happen, right? They will do some postmortem planning and they will not allow double taxation to happen. But if somebody didn't do anything, then they could face an obscene amount of tax. With some postmortem planning and some loss carryback method, they can reduce that tax down to 45. Still an offensive rate of tax, but much better than 75, we would all agree. And if they can do postmortem planning and pipeline still available and it's applicable, they can bring that down even further, down to about approximately 25%. But what you'll notice here is the tax planner that they're working with has methodologies within the Tax Act to reduce the tax bill, not eliminate the tax bill, and also not create the liquidity that's going to be needed. So it's important when we're doing this that we have an understanding of what on how these businesses wind up and what it is they want to have happen. But it's important for us to be working with their trusted advisor, and that's the accountant. You can be a trusted advisor, but you will never be the trusted advisor, folks. So we do not want to shy away from the accountant. We want to make sure that we are working with them. We know how they make their money. We know what's important to them. And we're putting the things together structurally and thoughtfully in a way that makes sense, that not only takes this tax bill from 75 to 25, but it gets reduced even further with life insurance, and that there's liquidity on hand to pay these taxes. So that way businesses are not squandered and wealth gets transferred to the proper people. The kind of the big thing that we as advisors need to know, and sometimes we get a little delusional about this, and I blame myself too, I think I was there at one time, is that a client doesn't need life insurance to pay estate taxes, which I understand. Don't type in the chat that there's no such thing as estate taxes in Canada. It's capital gains taxes. I get it. But a client doesn't need life insurance to pay estate taxes, right? What they need is liquidity. they need cash, right? They need cash when their heart stops beating, because that's what keeps these assets in the family. And there's the thing that we know about most estates is they tend to lack liquidity. And especially the more wealthy a client gets and the more successful they've been, you'll find there's a lot of hard assets that aren't easily liquidated. And that's why they need us. And while at CLU, Stephen Pelosi made a cool comment, and I stole it and put it into this presentation, which is, a firefighter will never get criticized for how much water they use to put out the fire. And I'll tell you that this is why this one stuck with me. The estate planner or the insurance professional will never get criticized for how much liquidity there is in the estate. But I guarantee you that you will get criticized if there's not enough and you haven't had that discussion. So a firefighter never gets criticized for how much water they use to douse the fire. Once we figured out the X, so once we know who our prospect is, we know their general problems, and that we've looked through their structures, we have an understanding of them, we're getting an understanding of what it is they value, and we know where they want this stuff to land, and we know the X that we're solving for. All of a sudden, we know, right? So in this case, this is a 50-year-old male on one of our products. It's a high early cash value product, so that way they have liquidity, use, and control of that money. But here, what we're looking at is, if at 85 in this particular case, this individual needed $3.2 million, what are all the different ways that they could come up with it? We call this the uninsurance sale, right? We actually call it alternative funding, but it's the uninsurance sale, meaning that your client doesn't have to buy life insurance to pay a tax bill. They just need cash. So what are all the different ways they could come up with cash? And so there's really 4 methods. The first one is they could start a sinking fund. You'll notice it's done in 2 ways, because they could give us that periodically, monthly, annually. They could give it to us in lump sum. We could do that at some interest rate. And, they give us $1.8 million over a period of time, a 10-year period of time. When they pass away at age 85, we'll hand their family over $3.2 million. So remember, this is an option, but it's not a great option, because your client probably doesn't want $1.8 million sitting in some cash account somewhere, right? What they want to do is buy more real estate, invest in their business, start up that new division, which has a yield of 13, 15, 20, 30% return, whatever that is for them, right? So that's usually not a great option. And usually sinking funds are only something that gets looked at if the person's uninsurable, right? The next option is bank loan. They could say, you know what, I pass away, my kids will go into the bank. And if they could go into the bank and borrow $3.2 million at 5% and pay that back over a 10-year period, it's going to cost them almost $4.2 million, right? And so this is an expensive option, right? Because they're not just showing up and getting 3.2, they got to pay back that 3.2 plus the juice, right? And so, that's going to impede cash flows on the business. And the bank will lend the money if they know there's a high probability they're going to get that money back. So they want to know that they can run that business, or else they're not really interested in lending them that money. The next option, which you won't find in here because it's a hard to quantify option, and that is they could sell assets, right? So we could convert bricks and steel back into cash. The problem with that is nobody wants to pay 100 cents on the dollar for that, right? We all know the term estate auction. We all know that people buy things at discounted prices when we know people have to sell under duress. And it's no different that if your family had to sell assets, properties, things like that under duress, they might have to take a 60, 40, 30% haircut on that money. And so converting bricks and steel back into cash is a very expensive option. And the last option here is the life insurance policy. And what you'll notice is that big bars are not so good and little bars are pretty darn cool, right? And so the life insurance has the lowest cost alternative. We're using a wealth accumulator, which gives us the liquidity, use, and control of that money all the way along. So we don't have a dead asset sitting in our balance sheet. And when we pass away, $3.2 million for the heirs to be able to pay the tax bill and keep all the assets. So little bars, good, big bars, bad. If that's all you remember out of that part of the presentation, that's a pretty cool thing. Now, if you like these sorts of graphs, so if you are working on something, and by the way, we could do something with present value and all that fun stuff. If you like this sorts of graphs, you can reach out to your regional salespeople when you're working on a case. This is something that we have in our arsenal of head office produced quotes. And if that isn't enough, like if convincing them that the life insurance is the lowest cost alternative isn't enough, then there's this thing called the and asset, or we call it the immediate finance arrangement. But I will tell you that this is not something you go, nobody wants to buy an IFA, okay? Nobody wants to buy that. What they want is to keep investing their money into what they value. So you have to have an understanding of what it is they value. And I'll tell you, you have to have an understanding of the sort of yield they get on their money, because really, what is an IFA? It's the ability to lease your insurance effectively, and it reduces your yield. Yes, you have to pay the interest costs out of pocket, but really it's a smarter way of arranging money for some people. But for clients that are not active in the management of their assets and they don't drive their own yields, it's risky to me to use this concept. So we have to understand what it is they're trying to solve, that life insurance will solve. I often laugh, many clients would rather get a lease on life than buy life insurance, meaning that if we could sell them a 40-year lease on life that they would never get sick and they could always invest and run their businesses, would they take that, or would they take the life insurance? And the interesting thing is, a lot of people would take the lease on life. And if you've heard the lease on life, it's because it comes from Ben Feldman. That's a Ben Feldman line. And so really, the end asset is something that allows them to not only have the assurity or security of knowing that the life insurance is there to take care of the estate, to address that liquidity issue, but also that they get to keep their money in their coffers, investing in the things they actually want to invest in, the things that they've built their massive wealth off of. It becomes a great tool at that time. But you'll notice that this is so far down the chain in the presentation that we're talking about. This is not something we ever lead with, because nobody wants to buy an IFA, folks. What they want is they want to solve issues. And the IFA is always a secondary sale to the primary purpose of why they would own life insurance. I was at this seminar a little while back. Tom McCullough wrote a book called The Wealth of Wisdom, the top 50 questions that wealthy families should ask. It's a good book. He also was one of the co-founders of Northwood Family Office, which basically just sold. But I saw him speak, and there was a thing that he put up in the middle of the presentation, and I'll tell you, like 30 seconds after he put it on, my brain's getting ready to turn off. It says bricks and mortar. And if you're like me, your head's like, yeah, okay, real estate. Wealthy people buy real estate. I get it, right? And what he said was, and I love the way he positioned this, folks. He said that our clients at Northwood are really good at acquiring bricks, right? So what's a brick? A brick is a business. A brick is a property. A brick is a will. A brick is a trust. A brick is a life insurance policy. It's that, mutual fund that they bought from their nephew. So they're really good on acquiring things. And he said, what we do is we provide the mortar. What we do is we provide the very thoughtful mortar to hold all those bricks together and decide which order they should all go into. And so what I really liked about that is, it's very true. Our clients are very good at acquiring things. And what our job is to show them how it comes together and show them how that wall is either sturdy or where the weak spots are, right? And so I love that analogy that he provided, because ultimately what our clients think they're building in their heads when they're acquiring things is this. They think they've built the financial Taj Mahal, right, of estates. But in reality, when we start going through and we see a lot of times that they bought stuff, but there's not a lot of cohesion, what we find out the reality is that they built something like this. Is it a house? Yes. Is it correct? Maybe not, right? And ultimately, if they work with us and they're able to open up to us and they see that we're process driven and they see that we have real value we can add, then we can do this before or after, right? We can take things from the shambles or the small good pieces that they have, and just we can discard some of the other stuff, and we can turn it into ultimately the plan that they're looking for, right? So they get to achieve everything that they want. Because if we're building a modern contemporary home, we're probably not going to take the antique furniture with us, right? So we want to make sure that what we're building makes sense, that it makes sense with the tax act and where things are at today, and that it's going to stand the test of time, right? On what we're working through with these folks. And so I'm going to leave you with a little bit of an analogy, and I use this one a lot. And if you've seen it online, bear with me. But I love this one, and hopefully you like it too. And it was taught to me by Dennis Capone Sr. I have seen Tom Hangus also use something similar, but that's where I steal this one from. So dairy farmers and business owners, ultimately it's the same process, right? What do they want? What's the reality of where it is they are today, and what would happen, right? What's the revelation that's going to come out of this? Because once again, a lot of times we've been acquiring things, we've been doing things that we think are really smart, but when we look through the structures, it may not actually produce what we think. So I love this. There's a Don Hart one, which I know isn't actually Don's, but he's the one that drilled it into my head, which is, if what you thought to be true turned out not to be, when would you want to know that? That's really what we're talking about here, is what is it that you ultimately would like to have happen? What's the reality of how things would work out today? And what's the revelation? And so I can tell you that I sat in a lot of meetings like this where people tell you how things are going to work, and then we go back to them with a very thoughtful presentation and memo showing them that's not really the way that's going to work. That's not the way the Tax Act works. It's not the way the finance and the CRA are going to let this go down. And so here's the reality of what's going to happen. And this is the only way, here's how we can make this go away. So one thing we know is dairy farmers work really, really hard, much like your business owner clients. Do not discount this. It is very important for us to recognize how hard business owners work, right? It takes an incredible amount of energy, fortitude, processes, people, wrestling with things, late nights. It is ugly being a business owner. We all know this, and you folks are business owners. You know the struggle on this, right? It takes an immense amount of work and energy, right? And ultimately, we're doing this for who? We're doing this for our legacy. We're doing this for our family. And really, a lot of businesses, and a good question to ask always is this business built to sell, or is this business built to last? A business that's being built to sell will obviously be very different in its planning phases than what it is to last. And if we're looking at one to pass down generations to generations, then the planning that we do is going to be very important, right? Because we know that upon second death in a business, the tax man cometh, right? And the example on a dairy farm is that the tax man's going to show up after the second of you pass away, and he's showing up with a butcher, and he's looking to butcher about 1/3 of the cattle, and he's going to call that tax. And if the farmer only knew that they could give a little bit of the milk on an annual basis over to the life insurance professional, and that upon the second death, when they walked out, they could just pay off the tax bill because we would bring the liquidity with us, and ultimately that would keep the farm and the family, I think more people would be open to it. And remember, there's all those secondary strategies based on what they're doing. But ultimately, it's about simplicity, folks. And remember, simplicity scales and fancy fails, right? And the more we get to know about the outcomes that people want to create, the better the chances are that they're going to move forward with us at the time of putting pen to paper and doing the tests. So that's the formal part of the presentation. Hopefully you got a few pieces out of that. I'm going to come off of presentation mode and see if there's any questions.
Nope, nothing but love for Mr. Brent Swatuk here. Just everyone's just saying thank you, and obviously lots of great feedback. Obviously that we're going to continue to get from this presentation, and I know I certainly took a lot of takeaways from it. I love that firefighter analogy. I think that's same thing with that upside down house kind of made me chuckle, because I think that so many of our clients, that's exactly the house that they have built, and they think that they've, have everything put together. But, clearly once they have somebody like yourselves to come in and crash test that plan, they realize, how sort of ridiculous of planning that, they've done, not unintentionally or whatever, but they're just not the professionals. So, I don't know if this could have gone any better, Brent. Honestly, I think, again, lots of takeaways. Thanks for coming out today. Thank you for all the participants that have taken time out of their busy days to join too as well. If you have any questions, please feel free to reach out to your business development people in your offices, and of course your Equitable Life people. And Brent is always available as well, as he's always been so gracious with his time. So again, thank you everybody for coming. I wish you well, and have yourselves great days.